and welcome to Capital Market Live on Channels Television. I'm Will Ibang. First things first, let's check in on the markets. We begin with Europe, where stocks ended the week flat as hopes of a Santa Claus rally faded. The German DAX closed Friday higher by 0.19%. The UK's FTSE 100 rose 0.05%, while France's CAC 40 fell by 0.2%. Now to Asia, where the shares traded lower, taking the lead from losses on Wall Street ahead of the release of some economic data in the region. Core consumer prices in Japan rose 3.7% in November on an annualized basis, marking the fastest pace since 1981. The Nikkei 225 fell 1.03% to close at 26,235 points, while the Japanese yen stood at 132.5 against the US dollar, about the strongest levels it's seen in 4 months. Hong Kong's Hang Seng Index dropped 0.3% in its final hour of trade as investors digest China's longer-than-expected reopening. The Shanghai Composite fell 0.28%. Now to the U.S., where the S&P 500 and NASDAQ Composite rose on Friday, but still posted a weekly loss as recession fears continue to batter investors' sentiment. The S&P 500 rose 0.6% to 3,844.82 points, while the NASDAQ Composite added 0.2% to close at 10,497.86. The Dow Jones Industrial Average closed 0.5% higher. The S&P 500 ended the week down about 0.2% for the week, posting its third straight weekly decline. The NASDAQ Composite, meanwhile, lost 2% for the week, also for the third down week in a row. The Dow was the outperformer, posting a 0.9% gain. Now to the local equities market. This week, the bulls dominated the markets. The benchmark index recorded gains in all trading sessions, save for the second trading session when the market closed flat. The all-share index advanced by 0.79% week on week to close at 49,706.09 points. Bargain hunting in GT Coals, Stanbic, FBN Holdings, Boa Foods, and Geregu spurred the positive outcome. The month-to-date and the year-to-date gains rose to 4.3% and 16.4% each. Activity levels were largely positive as trading volume and value increased by 9.4% and 40% week on week. Sectoral performance we see was positive. We see following gains in all key sectors that we track. Now, Thomas Wyatt topped the gainers chart for the week, while UPDC PLC led the decliners. The trio of UPDC Real Estate Investment Trust, FBN Holdings, and GTCO contributed 51.13% and 18.69% to the total volume and value traded in the week. Meanwhile, the NASD OTC Securities Exchange Index closed the penultimate trading week in December negative. The NASD Securities Index fell by 0.61%. The exchange lost 5.68 billion naira in value. However, volume and value rose sharply. Volume traded rose by over 340% to 45.98 million units, while value traded jumped almost 600% to 223.94 million naira. Afriland Properties topped the advances list for this week, while Niger Delta Exploration and Production led the losing stocks. At the same time, Nigeria Mortgage Refinance and Geofluids PLC were among the top 5 stocks traded by volume for the week. Reports a quick look at the Deputy Director General of the Central Bank of Nigeria, Aisha Ahmed, where she was before the Senate to talk about the cash withdrawal policy that was revised earlier in the week. Let's take a listen.
Lawmakers in the House of Representatives received the representative of the Central Bank, Governor Aisha Ahmed, who is in charge of financial system stability. Mrs. Aisha Ahmed is here to brief lawmakers on the new monetary policies of the central bank, involving the redesign of the Naira notes and the cash withdrawal limits.
It is to reduce cash processing cost, cash minting cost, processing cost, the cost of destroying old notes, and the cost of moving the cash from place to place, the physical cost of protecting it. The data available to us shows that 94% of all transactions, cash transactions, fall below the 500,000 limit. And this includes in areas in the country that are predominantly cash, that are not part of the cashless policy. 82% of corporate transactions also are below this limit. What does this mean? It means that 94% of all individual transactions will not be affected.
Lawmakers questioned the proximity of the policies to the elections and why Parliament was not carried along in the processes leading up to the final decision.
We are about facing the general election.
Thank you.
And let me just re-echo one line. Are you not seeing it as an opportunity for the ruling party to reach out to opposition parties?
At no time do we make decisions based on any political considerations, and I think it's important that I understate that.
Is the CBN governor not aware of the provisions of the Act with regards to his statutory obligation to address the National Assembly semi-annually, that is 2 times minimum in a year?
If the CBN was aware of this provision of the law, how come the CBN, before even going public with this policy, did not brief the House?
We remain open to continue to engage and do better. When the House convenes these hearings, it is the responsibility of us to show up, and we look forward to you doing so.
Can the CBN tell Nigerians how much was printed out of this new currency? How much was printed?
I'm sorry, I'm not able to share that figure now, only because I want to give an accurate number.
Outside the chamber, the House Committee Chairman on Defense appraises the interaction.
The policy is very good, we all agree with it, but the only issue we have is with the timing. She also sort of said that Nigeria has 60 million BVNs, right? Population of 200 million. What happens to the people who don't have BVN?
It is not clear what position the House will take after this interaction, considering that it had asked the CBN to suspend the cash withdrawal policy. Terry Ikumi, Channels Television News.
That and more important events took place earlier this week, and that set the tone for the discussions we're having. Joining me to discuss the activities in the capital market is Mr. Tajuddin Olayinka, Chief Executive Officer, Wyoming Capital and Partners. Good to have you on the program, Mr. Tajuddin.
It's my pleasure. Good evening.
Good evening. Now, we'll start off first with what is taking center stage in the country at the moment, when the heat of the electoral campaigns and all the presidential candidates contesting the 2023 presidential election have released their manifestos to the public. Now, what do you think, Mr. Tajuddin, would you consider to be the economic focus of these candidates, and how far are they from the reality of the Nigerian capital market, what the capital markets can offer them?
Okay, that's a good question. I would take it by looking at 5 leading candidates, and in no particular order. I will start from Alhaji Atiku Abubakar, the candidate of PDP. I would then take it down to the number 5 candidate there, maybe somebody like Adebayo. Now, with Atiku, he has said, he wants to drive economic growth. He wants to achieve a very stable economy. He wants to propel economic growth in a way that, economy will create jobs. So that means that he has a focus that is completely different from the focus of the current administration. Then I also look at what Ashwagi Bola Ahmed Tinubu has been saying, especially, I haven't listened to him a few days ago, when he had a business lunch with some, business executives. And he said a lot, at that forum. He gave us the direction that he would want to take the economy to. Of course, prior to that, he had said that we want to have an accelerated growth, a growth of about, a double-digit growth in GDP. That is quite substantial, and that is also significantly different from the pursuit of this current administration, even though he's also part of that administration. But he is trying to move, move significantly away from this slow growth that we've had over the past 7 years to a more accelerated growth, a more inclusive growth that can actually take an economy to a point where we can say, yes, we have a good economy. I've also listened to one question of NNPP. That one talk about frugality, more or less, how best to manage resources. That's also a shift from the current focus of this administration. I've also looked at Peter Obi. He has been so emphatic about the direction he wants to take the economy to. He said, and he has said so repeatedly, he wants to move economy away from consumption to production. That is a significant shift if we can achieve that. And of course, I've also listened to the candidate of SDP, Adebayo, the young man. He's been consistent in his own pragmatism. He's been so pragmatic in the way he looks at the economy and how best to run the economy. So in summary, all these candidates have been saying things that there have to be a radical shift from the current focus of the present administration for them to achieve significant economic growth. And what that means that the current focus, we have to look at the current focus of this administration of President Muhammadu Buhari. He has been so fantastic in the area of what we call it, infrastructure development, what have you. But those infrastructure development has not turned into a very significant economic growth, which means something is still missing there. And that missing link is the focus of that administration. The focus of this administration is a public sector driven economy. An economy that has a public sector dominance against an economy that has a private sector dominance. So he is looking at a public sector driven economy against an economy that has always enjoyed private sector dominance. So that's an issue. So if you look at it holistically, this new administration are talking more of private sector driven economy, while the Buhari administration has actually been pursuing a public sector driven economy. So there has to be a significant shift, and that shift means that we have to make use of private capital when the new administration comes in.
Okay.
All of them, all these leading candidates have talked more about private capital, and when you are talking of private capital, it means that you have a lot to do in the capital market. You have a lot to to allow private sector to raise permanent capital to be able to drive capital formation. So there's a lot that will happen in the capital market if we have all these candidates that are more or less pro-market.
Okay, so talking about the pro-markets, I'm seeing that for most of the three candidates, so like when we talk about Peter Obi, and we're also talking about Tinubu and Atiku. They all talked about the FX, a change in the FX policy. Do you think that this is achievable based on what we have currently, or do you see them achieving this despite all that is happening, or yes, just promises?
Okay, it is achievable because in trying to move economy to the level where it should be. Let me take us through what Tinubu said recently. He said he's going to tinker with what is happening in the foreign exchange market. In other words, he's looking at unifying all the exchange rates so that we have one, we have law of one price dictating the pace in that market. And so, what does that mean? It will, number one, to be able to accelerate growth by double digit, even if it's going to be in 4 years, it means that you have to run economy through an adjustment process that will make you attain internal equilibrium, while at the same time restoring external equilibrium. By internal equilibrium, I mean equilibrium of national income at full employment output and low inflation. External equilibrium is just simply the equilibrium of a balance of payments. So any administration that is going to pursue this kind of agenda means that there's a lot for them to do, and part of that lot to be done is that exchange market. You must have an exchange market that can attract private capital from abroad.
Mr. Tajudeen, hold your thought
and
there.
And I believe all of them have actually said things in that direction.
Okay, Mr. Tajuddin, just hold your thought there. We'll just go on a quick break right now. Now, still to come, the Securities and Exchange Commission approves the listing of the Technology Board on the NGX. Do stay with us. This is Capital Markets. Welcome back. If you just joined us, this is Capital Market Live on Channels Television, and we've been reviewing interesting issues shaping the activities of the capital market. Mr. Tajuddin Olayinka is still with us, and we were talking about the manifestos of the presidential candidates and how that affects the capital market. So I just want to ask Mr. Tajuddin, the president, you talked about the FX plan. Could you just finish what you were saying about that, because I have the next question.
Okay, I was just trying to say that virtually all of them, because of the fact that they want to ensure that they restore external equilibrium, which means that they have to have, in trying to do both, either it's internal equilibrium or external equilibrium, you must have, you are trying to say you must have a functional goods market, you must have a functional financial market, and you must have a functional foreign exchange market. So the fact that all of them have talked about having a stable exchange rate, having a more dynamic, a more market-friendly exchange rate, we will be able to attract, foreign capital, there'll be capital flow into the economy, and of course, with that in place, we should be, we should be able to, restore external equilibrium by also, ensuring that we have productivity. So the fact that all of them are actually looking in the direction of foreign exchange management, and of course, trying to make sure that they have, very strong economic growth, means that we are going to have a regime that is significantly different from this current regime in terms of economic focus.
Now, speaking of a different regime, just this week, the President Buhari sought the approval of the National Assembly to restructure and securitize the Ways and Means advances previously extended to the federal government, that's by the central bank. And now that amount is totaling about over 23 trillion naira. But what does this hold for the capital market? And how will these candidates be able to manage this debt that is coming in? What do you think? How do you think they're going to be able to absorb? Are they going to have plans? Do you think they have plans to be able to manage the debt? Because they're going to come in and meet what this debt is adding to the capital market. I mean, it's adding to the debt profile of the country already, because when they securitize it, it becomes more debt for the government. And then this candidates coming in, do you think they have plans to manage the debt of the country?
Okay. Let me just not necessarily sounding as a warning, but it's something that they have to prepare for, because when federal government decide to securitize Ways and Means, in the first instance, Ways and Means are supposed to be overdraft given to governments, that shouldn't stay with government for more than 90 days. Within 90 days, government should retire. You can always take a new one, but you must limit yourself to a certain percentage, usually 5% of the revenue of previous year. So this one has gone out of the acceptable norm, and so what that means is that you are securitizing 23 trillion naira of Ways and Means advances that was never recognized as part of public debt, and so you are now integrating that to a public debt. So the level of public debt that was already over for 20 trillion will now be raised by that level of securitized Ways and Means advances. What that means that you are going to have a humongous debt stock. The stock of debt will go up by that 28 trillion, and of course, government is still borrowing will still borrow up to that May. And now, for this presidential candidates, they have to be very, very, very truthful with what they have said about managing exchange rate, because when CBN takes on this debt, what it means that CBN cannot hold on to this debt instrument for too long, because it can't hold it on for 7 years, because it needs to regain liquidity. In trying to regain liquidity, CBN must offload that debt to the market, though in a very systematic manner, so that it does not crowd out private sector borrowers. And what that is that as soon as this debt is released to the market, gradually by central bank, it will spike up the yield curve. It will spike up the yield in the fixed income space, and that means that you now have the challenge of higher yield and higher cost of capital in the economy. The cost of capital will shoot up in the economy because there will always be a demand side imbalance with this huge supply to the market. And so what that means that that can be another attraction to foreign portfolio investors who are now eyeing higher yield in the Nigerian fixed income space. But the greater challenge is that of the FX market, which does not provide a very stable exchange rate or does not provide a predictable exchange rate management. And so, for that reason, all these presidential candidates will need to manage the exchange rate in a way that will attract these foreign investors, so that it won't be only the yield that is attracting them. It will also be because you have a very robust exchange rate management, exchange rate regime that will attract these foreign investors. So clearly, the market in 2023 is going to be very challenged. The debt is huge, but the moment you begin to have foreign investors coming to play in our fixed income space, and of course in the equity market as well, you will now begin to see moderation in that yield. That yield will eventually come down, and we have a better, cost of capital or much lower cost of capital in the economy that private sector can leverage on. So the only way to achieve that is first and foremost, deal first with the financial market, which is the capital and money market. Deal decisively with the foreign exchange market. In fact, foreign exchange market is core. Having a stable foreign exchange rate is core to achieving what I've just said, to achieving a very balanced external sector. So they just have no choice. They have to prepare for how best to manage the exchange rates. It's critical for all of them. Even if you are a socialist, you must look for a way of managing this exchange rates. I think that is where we stop for now, because the 2023 is quite critical to all of us. We have two administrations. Buhari administration is going. Another administration is coming in with two different focus. The current one has the public sector dominating focus. The new one that is coming in is having a private sector dominating focus. So there's a shift of focus, and that means that they must handle the exchange rate management very well. Whatever they have to do to central bank to ensure that we have a unified exchange rate, they must do it.
Okay. Quickly before we go, I mentioned earlier that the Securities and Exchange Commission has just approved the draft rules for listing on the Technology Board of the Nigerian Exchange Limited. Now, are we seeing some form of NASDAQ here? Is MTN and Airtel going to be listed under this tech board that the SEC just approved? Can you tell us more about this?
The tech board is actually is a new board. It's not necessarily all about ICT. It's for these tech companies, the fintech, the companies in the fintech space. These companies have existed for so long and have been doing their businesses, mostly helping startups to raise capital. From abroad. They've been raising money from abroad, mostly in foreign currencies, to support businesses, especially startups in Nigeria. And so this thing they have been doing is just limited to the people who are playing this space. But what SEC and the Nigerian NGS has done is to now say, okay, let's bring these tech companies into the market. Let's bring them to the fold, so that they will enjoy more visibility. People will tend to see what they are doing, because what they are doing is actually in support of the economy. Trying to raise money for small-scale businesses, raising money for startups, and doing all those things. So by the time you bring them into the exchange as a listed entity, they then begin, they can also access market for new money to be able to raise capital for themselves, for their own businesses. And of course, why doing what they are still doing, more shareholders, more local shareholders can participate. It's actually a way of democratizing, what goes on in that space, in the fintech space, so that you have, and they are in two categories. There's a small category and there's a big category of fintech. Basically, it's just to make sure that qualified investors who are savvy, who understand the dynamics of that market, can come into that space and participate in what these fintech companies are doing. So it's not all about MTN coming there. It's not all about Airtel coming there. It's not all about IT generally. It's about those fintech. Some of these companies may ordinarily not qualify to be listed on an exchange because of the structure they have. Not so much of a good governance, but that good governance will come into place once they are on the exchange. Not much of the directors. So, but the truth is that It's more or less trying to systematically bring them to a level where they can also enjoy good governance, because there will be more shareholders coming to that space, joining them, and that they must be qualified shareholders, not for any not for anybody just going there. Yes.
Thank you so much, Mr. Tajuddin, for joining us on the program. We have run out of time. Mr. Tajuddin, Chief Executive Officer, Wyoming Capital and Partners. Many thanks for sharing your perspectives on the program.
It's my pleasure. Thank you very much.
And that's it on Capital Market. Do join us same time next week. Don't forget to watch this again on your YouTube page, on our YouTube page at Channels Television. Also follow us on other social media platforms to get updates. And Will Ibong is bye for now.